Hi everyone, I am Jayasha, and in today's video we are going to discuss about circuit filters. Let's start. So whenever I log in into my Demat account and I go to any particular share, then I always see this thing called upper circuit and lower circuit. So like in this example I am seeing Infosys right now. You can also see the screenshot on your screen. So here you can see the upper circuit limit is 1781.90 and the lower circuit is 1458.00. So first of all, what is upper circuit and lower circuit in simple terms? So upper circuit means the highest limit till which the price of Infosys can go till in today's for today, okay, till 3:30. And for the lower circuit means the lowest price till which Infosys can go for today. Okay, so I've also explained to you in my video of LTP, which is the latest traded price, that how these price fluctuations happen in a particular stock. So you know that it happens because of demand and supply, right? So if the demand is increasing, so the price will also increase. Okay, now let's say that, so here you can see the opening price is 1613.30. Okay, it's written open. That is the opening price for today. So today at Friday when I'm recording this video, so at 9:15 the opening price was 1613.30. Okay, now after that, if the demand of Infosys stock increases, people are willing to buy, more and more people are willing to buy the stock, the price is going to increase. Okay, so let's say from 1613.30 it went to let's say 1620, 1630, 1640. But till when it can increase? It can only increase up to 1781.90. Okay, if it goes up to 1781.90, the stock will get locked on a upper circuit. Okay, and similarly, if the price is falling, it can fall only up to 1458.00. Okay, so that is the lower circuit. So typically what happens in a upper or lower circuit means, if we talk about the upper circuit, there will be typically all buyers and no sellers. Okay, so here you can see the market depth table. So here you can see that 31.41% people are willing to buy it and 68.59% people are willing to sell it. Okay, but when the stock reaches an upper circuit, you will see that there will be 100% buyers and 0% sellers. And similarly, when the stock reaches a lower circuit, you will see 100% sellers and 0% buyers. Okay, because so the logic of an upper circuit or lower circuit is to kind of create a boundary for the stock today. Okay, that we understood that, okay, it increases or decreases, the price increases or decreases because of demand and supply, right? But till how much can the price increase or till how much can the price decrease? That limit is set by the upper circuit or lower circuit. Similarly, if I go to the screenshot which I took for Zomato, so here you can see the upper circuit is 69.45 and the lower circuit is 46.35. So the same logic applies here, right? Now one thing which I want you to note here is that how are these prices calculated? Okay, how was this 1781.90 and 1458.00 calculated for Infosys? And similarly for Zomato, this 69.45 and 46.35, how was it calculated? Okay, so now you can see two terms over here. One is open and one is close. Okay, so the open is 1613.30, that is today's opening price, and the close is 1619.95, that is yesterday's closing price. Okay, this screenshot is taken during the live market hours of today, which is Friday. Okay, so the open is the opening price of 9:15 on Friday, and the close is the closing price on 3:30 on Thursday, which is the previous day. Okay, now the upper circuit and lower circuit limits, these are calculated according to the previous day's closing price. Okay, so the Thursday's closing price of Infosys will decide what will be the upper circuit and lower circuit on Friday for Infosys. Okay, similarly, if I go to Zomato, so here you can see 57.90 is yesterday's closing price, which was Thursday, and today is Friday. Okay, so yesterday's, which is Thursday's closing price, which is 57.90, will decide what is the upper circuit and lower circuit of today. Okay, now these are calculated in terms of percentage. Okay, so for Infosys it is 10%. Okay, so yesterday's closing price is 1619.95. So 10% above that is the upper circuit and 10% below that is the lower circuit. Okay, so you can calculate it. So 1619.95 plus 10% of 1619.95 will be the upper circuit, and similarly for the lower circuit you can subtract 10% from it. And for Zomato also you can calculate it. Okay, but for the Zomato the percentage is different. Okay, so this percentage is different for all the stocks. It can be 5%, 10%, 15%, 20%. Okay, but the logic over here is yesterday's closing price will decide today's circuit limits. Okay, so according to this 57.90, I think the circuit is 50. Yeah, it's 20% for Zomato. Okay, so 57.90 plus 20% will be the upper circuit and minus 20% will be lower circuit. Okay, so the Monday's closing price decides the circuit limits on Tuesday. The Tuesday's closing price decides the circuit limits on Wednesday, and so on, right? So now let's say that so you saw that today the Infosys stock opened at 1613.30, and the screenshot was taken when the price you can see on the top right, that was 1598.45. Okay, now let's say that today finally the stock at 3:30 closes at 1600 exactly. Okay, just for simplification. So now today it closed at 1600. Now today is Friday. Now the next trading day will be Monday, right? So Monday's circuit limits will be calculated according to today's closing price. Okay, which is 1600 if we are assuming that if that happens. Okay, so 1600 plus 10%, that is 1760, and 1600 minus 10%, that will be lower circuit for Monday, right? So according to the Friday's closing price, the Monday's circuit limits will be decided. According to the Monday's closing price, the Tuesday's circuit limits will be decided, and so on, right? Okay, now if I go to the Zomato share. Okay, so here you can see the opening price was 58.10, and when the screenshot was taken, the price has increased to 59.85. Now let's say that some sort of a news came for Zomato, and the demand increased. Now suddenly everyone wants to buy Zomato share, and the price increased up to 69.45. So what will happen is at 69.45 the price will get locked, because now everyone is willing to buy, no one is willing to sell. Like I told you, 100% buyers and no sellers. Now the trading will begin on Monday. I mean, it can begin today also, but everyone is ready to buy, but no one is ready to sell. And now the price cannot increase more than 69.45 because that's the upper circuit, right? Similarly, if it goes to a lower circuit, everyone is willing to sell and no one is ready to buy. So ideally the price should fall even more, but since it has hit a lower circuit, it cannot fall more and the price will get locked. And after that, the trading will begin on Monday. Okay. So see, the logic over here is, so if I go to Infosys, so the same thing applies over here, but Zomato and Infosys in terms of upper and lower circuit limits are slightly different, which I'm going to cover in the next segment. So let's go to the next segment. Now there are two questions which come to my mind. First of all, that why do we even need such a thing called upper circuit or lower circuit? If the stock is falling, why do we need to stop it at a lower circuit? Why cannot we let it fall more? Similarly, if the price of the stock is rising, why do we need to stop it at a upper circuit? Why can't we let it increase more? What is the need of this? So, and the second question is that many people will say that you are saying that okay, 15%, 20%, so after that reaches the upper circuit or lower circuit, it will get locked. But I have seen and I have heard stories that like many stocks, they have done 30%, 40%, 50% movement in one day. So how come you're saying that 15%, 20% and the price will get locked? So I'll answer both the questions. Now the first question is why? Why do we need this? So now imagine that, okay, let's imagine a stock at 100 rupees. Okay, and you had bought, let's say, 1000 quantity. So that is a 1 lakh rupees of investment. Okay, and the stock hits a lower circuit and it reaches 80, let's say. So that is like a 20% loss. Okay, now your 1 lakh rupees of investment, that would have turned into 80,000. So 20,000 rupees of loss on your 1 lakh rupees of investment. That is a huge loss in one day. 20% is a huge loss in one day. Okay. Similarly, if someone has sold those shares and if it's upper circuit, so they can also have a loss, right? So this is the main idea, that why do we need these circuit filters, is that to prevent huge losses of the investors in a single day, right? So what will happen is, if let's say that if there was no such circuit filter, okay, then because there was a circuit filter in this case, the price stopped at 80. Let's say the filter was for 20%. Okay, the lower circuit and both the upper circuit, they were for 20% for that particular stock. For Infosys we discussed it was 10%, but let's say for the stock which we are discussing, which is priced at 100 rupees, it was for 20%. Okay, so now because we had this lower circuit, it stopped at 80. But if we did not have this, this facility or this rule that if it goes down, it has to stop at the lower circuit, then who knows, it might have even gone to 70 or 60. So imagine 30%, 40% loss. So your 1 lakh rupees of investment and 30,000, 40,000 rupees of loss in a single day. That's crazy, right? So that is the reason this concept was introduced of upper circuit and lower circuit, right? To prevent huge losses of investors in a single day. Okay, now they can be both, even if they can be on the buy side, they can be on the sell side. Okay, so now coming to the second question. Now you might have obviously heard stories that 30%, 40%, 50% movement in one single day, but here we are saying that 20% is the cap. So how is it possible that 50% movement or 40% movement in a day? So here's an exception to this upper circuit lower circuit thing. Okay, now first of all, this upper circuit lower circuit exists for all the stocks. Okay, but for some stocks, that is specifically for the stocks listed in the FNO segment. Now what is FNO? That is futures and option segment. Okay, for those stocks, when it hits the upper circuit, it can even go beyond that on the same day. Okay, so first let's discuss for a normal stock which is not listed in the FNO segment. Okay, so let's take the same example. So 100 is the previous day's closing price. So 120 and 80, right? So 20% above 100 and 20% below 100. So 80 is the lower circuit and 120 is the upper circuit. Okay. Now let's say that yesterday's closing price was 100 and today it hit a upper circuit of 120 rupees. Okay. So now the price is locked at 120 because everyone wants to buy and no one wants to sell it, right? So the price is locked at 120 and at 3:30 p.m. the market closed. Okay. Now tomorrow's market price will be based on this 120, which is today's closing price, right? So previous day's closing price. So today's closing price, which will be 120, based on that upper circuit of tomorrow, that will be 20% of 20% above 120, 20% below 120, right? So 144 and 96, right? 20% above 120 and below 120. Okay. Now what will happen tomorrow is it can even open. Let's say, so today it was at 120 at closing. Let's say tomorrow it opened at 130, but the upper circuit for tomorrow is 144. So it's okay, normal trading like every day will happen. So let's say tomorrow it opened at 130, then the price fluctuated and it closed at 135. Okay, but it's also possible that tomorrow at the opening itself it hit a upper circuit. So first it was at 120 today at the closing, and 20% above that is 144. So let's say tomorrow at opening itself it did 144. So it will get locked for the entire day. Okay. So for the opening price also, this 20% or 5%, whatever is the circuit limit, that is applicable. So if the limit is 20%, it cannot open more than that. The opening price cannot be more than the previous day's closing price, 20% more than that. Okay. And similarly for the lower circuit. So if today it was 120, so the limits came out to be 144 and 96. So tomorrow the opening price cannot be more than 144 and cannot be less than 96, right? So it is applicable for the opening price and the price throughout the day as well. And this will be based on today's closing price. So tomorrow's fluctuation will be based on today's closing price, right? Not tomorrow's fluctuation. I should say tomorrow's upper circuit and lower circuit limits, they will depend on today's closing price, right? Now let's understand for the FNO. So a stock which is listed in the FNO segment, for that what will happen is the same thing which happened for this stock tomorrow, it can happen today. So let's say 100 and 120, same example. So what will happen at 120 is today itself the limits will be revised. So after it reach 120, now the upper circuit will be changed to 144 and lower circuit will be changed to 296. And again the normal trading will start. Again it might hit a 144. And again based on 144, 20% above that, 20% below that, again the thing will start. So what happens for FNO segment is there is this concept of upper circuit and lower circuit, but once it reaches the upper circuit or lower circuit, on the same day the upper circuit and lower circuit is changed and normal trading again begins. If again it hits the upper circuit or lower circuit, again the prices will be calculated again based on like 20% above, 20% below, right? So for FNO segment the prices will change, not prices I should say, for FNO segment once it reaches the circuit, after that the upper and lower limits will be changed according to that price. Okay, if it reaches again, then again it will change, right? So what will happen is for the FNO segments there is this concept of upper and lower circuit, but like I told you, once it reaches that price, so the limits will change, right? Now how will we come to know that? Now first of all, what is this FNO, futures and options, and how will we come to know whether a stock is listed in futures and options? Let me show you on the screen. So this is the circuit filters watch list which I have created for today. Okay, so if I search for Infosys, okay, so this particular thing you can see over here, it's written cash. Okay, so this particular, okay, sorry, yeah, this particular is the normal equity share of Infosys, which we have discussed in the first video. That is, this is the ownership of the company and you are a small percentage owner of the company and everything like that, right? So this is the normal equity, this particular is the normal equity share of the Infosys company. Okay, now I'll go to FNO. So the top three which you can see over here, it's written futures. So these are futures of Infosys. Okay, so like you can buy Infosys share, you can sell Infosys share. Similarly, you can sell the future of Infosys, you can buy the future of Infosys. Okay, and if I go to these particular ones, which you can see, it's written CE and PE, and for different prices. So CE is basically call European and PE is basically put European. Okay, so these are options of Infosys. So again, you can buy options of Infosys, you can sell options of Infosys. Okay, so Infosys is listed in the FNO segment, but if I search for Zomato, okay, so you can see in the cash segment we can see NSE equity. Okay, so it is listed. So cash segment is the normal equity shares of a company where you are a percentage owner of the company, right? But if I go to FNO, you cannot see anything for Zomato over here, right? But if I go for Infosys, you can see that we have in the, okay, so here you can see this particular, it's listed on the NSE, and here it's listed on the BSE, and here is also there in the futures and options. But for Zomato, it's not there in the futures and options segment, right? So Infosys is listed in the futures and options segment, but Zomato isn't. If I show you even some another example, let's say I go to Reliance. So here you can see Reliance also is listed in the FNO segment. So again, you can buy and sell Reliance futures, you can buy and sell options of Reliance. Okay, so if I show another stock to you, GTN Textiles, which I'm going to show to you. So this particular stock is there in the cash segment, which is the normal equity shares, but it's not there in the FNO segment, right? So I hope you understood how to check whether a share is in FNO segment or not. You can either check through a broker or you can simply Google it out. So you will come to know that whether that stock is listed in the FNO segment or not, right? Now, like I explained to you, the concept of circuit filter for a particular share or a particular stock of a company. There is the same concept for the entire market. So I have already discussed to you about index, right? About Nifty, about Sensex. So what if the entire market, for if the price increases by a very good amount, a very high amount, or if the price falls to a very good amount, good amount is not the good word. So like I discussed to you about circuit filters. So circuit filters, this concept is applicable for a particular share or a particular stock of a company. If we talk about the entire market, that is about Nifty, about Sensex, right? I had explained to you about index. So in that case, there comes the concept of circuit breakers. Okay. So the same logic about upper circuit and lower circuit. So 20% above that, 20% below that, based on previous day's closing price. It's the same concept, but this thing is calculated for Nifty and Sensex. So this is the official website of NSE, and I'll show you this table right here. I'll leave the link in the description also. You can check it out, right? So you can see that the trigger limit is 10%, 15%, and 20%. Okay, this is for Nifty and Sensex. Okay, so if it hit 10% more than that, like upper circuit or lower circuit, in this case we do not use the word circuit, right? This name is circuit breaker. So we say that it's the Nifty increased by 10% or it decreased by 10%, right? So if this happens before 1 p.m., so there will be, the market will pause for 45 minutes. Okay, the market will pause, all the prices will freeze. There will be no trading for 45 minutes. Okay, and after 45 minutes, there will be a 15 minutes of, this will be a kind of pre-opening market session, pre-market opening session, right? So like we had discussed, from 9 to 9:15, there is this pre-market opening session, pre-market opening session. Okay, so similar session will happen for 15 minutes and then the market will resume normally. And if this happens between this time slot, then there will be only a 15-minute pause in the market, and then again 15 minutes of this pre session, and then this normal trading will continue. So similarly, you can see for 10%, 15%, 20%, according to different timings, if the market falls or increases by this much percentage, then first of all there will be halt of this much minutes, and here you can see if the market falls by 20%, so you can see remainder of the day, so the trading will stop for the entire day, right? So here you can see this is not applicable obviously, because trading will stop, right? And here you can see if the trading will stop for these much amount of time. After that, there will be a pre-opening session, and then the trading will resume for the entire day, right? So this was the concept. If the market falls or if it increases by a very huge percentage, or if it decreases, the market falls by a huge percentage in a single day. So when can we experience this kind of situation? You have experienced it recently, if you know about it, COVID-19, right? So when the news and all came, I don't remember exactly, but I guess it had hit a lower. I guess of I don't remember actually of how much percentage, but it had hit that percentage, and I guess the trading had halted. I don't remember. I'll need to check it. On March 23, when it moved nosedived by 3,934 points, that is 12.7% in a single day. So this is the first time in the history of index that it hit a lower circuit limit, right? So yes, these kind of situations have happened, right? So this is the reason for having, first of all, for stocks we have circuit filter, upper circuit and lower circuit, and for the entire market, that is for Nifty, we have this circuit breakers, right? So I want to show you some practical example of this, and that's why I've chosen this particular stock, which is GTN Textiles. I've just simply chosen it because it has many examples and different cases of upper circuits, lower circuits, and related to that. So that's the reason I have chosen this stock. So first of all, over here, I want to show you this case where it hit continuously, it hit upper circuits. So I want you to notice this particular section. Whenever I move this cursor, so you'll see this particular thing change. So O is the opening price of that particular candle on which I have my cursor right now. So O is the opening price. O is the opening price. H is the high. L is the low, and C is the closing price. Okay, so market opens at 9:15. So the opening price at 9:15 is O, the opening price. The closing price is the price at 3:30 when the market closes, and the highest price in between this period is the H, and the lowest price, which is L. You can see over here. Okay, so now notice that section whenever I move the cursor. So for here, you can see that the closing price is 8.60. Okay, and the percentage limit for this particular stock is 5%, like we discussed. 20% for Zomato, 10% for Infosys, right? So if I tell you, so here the closing price is 8.60. Okay, so the next day's limit will be 5% above that and 5% below that. So now I want you to calculate 8.60 plus 5% of 8.60. So that comes out to be 9.03. Okay, now there is no such 9.03 or 9.04 type of things in the stock market. Okay, for some stocks, particularly for the penny stocks, you will see that there are some stocks like 0.53 rupees, 0.54 rupees, and you shouldn't be paying attention to them anyway. But except for those stocks, you will generally see the prices in multiples of 0.05. Okay, so even if I just roll my cursor over here, so you will see 8.15. Just notice this section. Okay, so you will see 8.15, 9.00. 9.45, 9.05, 8.7, 8.6. Okay, so you will see in multiples of 0.05. So here this is 8.60, and based on this I calculated the next day's limit, which is coming out to be 9.03. So since we have the multiples of 0.05, I'll round it off to 9. So here you can see at the opening itself it was 9, and it stayed at 9 for the whole day, right? So I mean, from this chart, we cannot say that it stayed on 9 for the whole day, but at the closing also, it was 9 only. Yeah, the high and low was also 9. Okay, you can see over here. The opening price was 9, the closing price was 9, and the highest and the lowest price was also 9. So this tells you that for the whole day, the price was 9. Okay, so from here to here, we can see that the price has hit a upper circuit. Okay, because the previous day's price was 8.60. So the today's limit will be 5% above that and 5% below that. So the upper circuit for today, that is 8th November 2021, was 9, and it hit a upper circuit. And after that, the price got stopped there at 9. It neither increased nor decreased. So now for the next day, we'll calculate 5% above 9 and 5% below 9, because today's closing price is 9. So if we just calculate, it comes out to be 9.45. Right? So here also you can see 9.45. Right? So similarly here you can see it hit a upper circuit continuously. And after that, okay, I want to show you one more example. So here you can see it at a lower circuit. So here the closing price you can see is 9.40, and if you just do 9.40 and 5% less than that, it comes out to be 8.93, and here you can see 8.95, rounding out to the nearest 0.05. Now I want to clear out two confusions. Okay, first of all, it's a usual case. First of all, so here you can see it at a upper circuit, then again upper circuit, then again upper circuit, again upper circuit. It's a very usual thing to happen that if it's, let's say it hit a upper circuit, the next day also it hits a upper circuit, again the next day, and similarly for the lower circuit. But it won't keep on happening for continuously I mean, it won't happen forever, right? It has to stop at some point. So after here, you can see 10.30. So for the next day, if you see again, it was at 10.30, and in fact, after that, the price started decreasing, right? So after that, the normal trading might start. Okay, and another thing is, so here you saw that the price opened on upper circuit itself, right? So here it was 8.60, and based on this, the upper circuit for today was 9. Okay, so it's not that okay, the price had opened at upper circuit at 9, so now it cannot change. It's not like that. Okay, I want to show you this example over here. That's why I've chosen this stock. So here if you see 9.40, now this is a case of a lower circuit, so I want to do 5% less than that, so it comes out to be 8.93. So here it will be 8.95. Okay, now again let's do 5% less than that, so it comes out to be 8.5. Okay, so just see over here, the normal trading began so the normal trading began here. Okay, right? So here it was 8.95. Again here so it opened at 8.65. The closing was at 8.55, but it also, so it fluctuated, right, between 8.65 and 8.55. But again here we can see again it decreased, again here lower circuit, right? So my point is that it's not okay, let me just search for another example. Yeah, I was just searching for it. Anyways, so here you can see the closing price is 10.75, right? And here I think it had most probably at a upper circuit. Let's just calculate. So this is 10.75 and 5% more than that. So it comes out to be 11.2875, and yeah, 11.25, right? So it's a upper circuit, right? Now let's calculate based on 11.25 the next day's limit. So the upper circuit comes out to be 11.8125. So it will be 11.8 the next day's upper circuit, and the lower circuit also let's calculate. So the upper circuit is 11.8 and the lower circuit is 10.7. Okay, so here you can see the opening price is 11.8, but the closing price is 11. Okay, so from here to here it upper circuit of 5%. Here to here also the opening was at upper circuit, but after that the price decreased. Okay, so this is the confusion which I wanted to clear. So it's not as if that it's a rule that okay, the stock at upper circuit, now it's freezed for today. No, upper circuit means that the price cannot go more than that on the same day, but it can decrease. So see, here the closing price was 11.25. Okay, and for here the upper circuit is 11.8. So today it cannot go more than 11.8. But once it reached 11.8, you cannot tell that it has freezed today. It might also decrease, right? The rule for upper circuit is it cannot go more than that, but it can go less than that. Okay, I hope I'm making some sense. So see, here the price was 11.25 and here the price is 11.8, the upper circuit. Once it hit a upper circuit of 11.8, you cannot say for sure that it will remain on 11.8 for the entire day. It might again decrease, right? The point of upper circuit is it cannot increase further. Similarly for the lower circuit, let's say that if it had hit a lower circuit over here, and so what according to our calculation that comes out to be 10.70. So let's say it had hit a lower circuit of 10.70. So you cannot say that now it will stay at 10.70 for the whole day. Okay, it might increase. Just that because it's on a lower circuit, it cannot decrease further on the same day, because this is not an FNO stock, right? So I hope I was able to clear the two confusions, right? So here you can see that it has hit a lower circuit from year to year, right? Here you can see 4.91%, but it will be 5% actually, but since I told you that we round it off to the nearest 0.05, right? So this is a lower circuit. So the first confusion which I cleared is that the process will stop somewhere, right? The upper circuits and lower circuit won't remain for continuous time, right? So here the closing price was 7.75. Okay, so if we calculate the next day's limit based on this, it comes out to be the upper circuit is 8.15 and the lower circuit comes out to be 7.35. Okay, so here if I see the price, that is 7.8. Okay, it's neither upper circuit nor a lower circuit, so this is like a normal trading day. Okay, no upper circuits, no lower circuits. So so you will see that after one lower circuit is hit, the next day again it might hit a lower circuit, the next day again, but somewhere or the other it will stop and you will see a normal trading day after that. Okay, and the other confusion which I cleared over here is that once a stock is, so see, once let's say the price is increasing and it hit a upper circuit. So now the rule is it cannot go more than the upper circuit if it's not an FNO stock. But once it has increased and reached the upper circuit, it can again fall. The price can again fall. Similarly, let's assume for the lower circuit. Let's say the price decreased and finally it hit the lower circuit. Now it cannot go less than the lower circuit, but after it fall to the lower circuit, the price can increase again, right? I hope I cleared this confusion, right? You should not have this confusion in your mind, or else it can lead to losses, obviously, right? So I hope I was able to clear both of these confusions, and I was also able to show these practical examples of lower circuits. Also, you can check this chart by yourself also, GT and textiles. And this tool which I'm using is a very famous tool if you don't know about it, that is in.tradingview.com. I'll leave the link for this also in the description. So that was all that I needed to explain in this video. I'll see you in the next video. Bye bye.